China announced a significant escalation in the trade war with the United States. It will impose a 34% tariff on all U.S. goods. This measure takes effect on April 10, 2025. The decision comes as a direct response to the U.S.'s recent imposition of a 34% tariff on Chinese imports. This brings the total U.S. tariff on some Chinese goods to at least 54%, including existing 20% levies. China's finance ministry condemned the U.S. tariffs, calling them unilateral bullying and arguing that the tariffs violate international trade rules. China believes these actions harm global economic stability. President Trump responded to the news on Truth Social, accusing China of panicking. This latest development marks a significant escalation in the ongoing trade dispute between the two economic giants. This tit-for-tat exchange of tariffs has rattled global markets, raising concerns about the impact on businesses and consumers. The world is watching closely to see how this trade war will unfold. The potential for a negotiated settlement seems distant at this point. China's response to the U.S. tariffs extends beyond matching tariffs. China implemented additional measures targeting key U.S. sectors. China announced new export controls on 7 rare earth elements: samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and yttrium. Effective immediately, a licensing system will regulate these elements. This move has significant implications, as the U.S. relies heavily on China for these rare earth elements, which are crucial for various industries including electronics, defense, and renewable energy. Furthermore, China added 11 U.S. companies to its unreliable entities list, restricting their trade with China. Additionally, 16 U.S. entities were added to China's export control list, prohibiting exports of dual-use items to these firms. China also suspended imports of chicken products, affecting 3 U.S. companies and 5 major U.S. agricultural exporters. Sorghum imports from C&D, USA Inc., were also suspended, citing health concerns as the reason for these suspensions. These measures demonstrate China's willingness to utilize non-tariff barriers, leveraging their dominance in certain markets. This is a calculated strategy aimed at inflicting economic pain on the U.S. The Trump administration's recent trade actions have ignited a trade war with China. President Trump imposed a 34% tariff on all Chinese imports, in addition to the existing 20% tariffs. He also closed a loophole that allowed low-value Chinese packages to enter the U.S. duty-free. These actions represent a significant escalation in the trade dispute, and come after months of negotiations failed to produce a breakthrough. President Trump has long criticized China's trade practices, accusing them of unfair trade practices including intellectual property theft and forced technology transfers. He argues that these tariffs are necessary to protect American jobs and businesses. However, these tariffs have drawn criticism from businesses and economists who warn of the negative consequences. They argue that these tariffs raise prices for consumers, disrupt supply chains, and harm the global economy. Despite these concerns, the Trump administration remains committed to its hardline stance, believing that China will eventually make concessions. The escalating trade war between the U.S. and China has sent shockwaves through global markets. Stock markets around the world experienced sharp declines following China's announcement of retaliatory tariffs. The S&P 500 fell by 6%, nearing a bear market. This decline reflects growing investor anxiety about the impact of the trade war on corporate profits and global economic growth. The Chinese yuan also weakened against the US dollar, dropping to a 7-week low. This depreciation is a direct result of the trade tensions. It makes Chinese exports more competitive, but raises concerns about capital flight from China. The escalating trade war has created a climate of uncertainty, causing businesses to delay investments and consumers to become more cautious in their spending. Experts warn that a prolonged trade war could have severe consequences for the global economy. They urge both sides to return to the negotiating table and find a resolution that addresses their concerns without further damaging the global trading system.